It's Greg, Master Trader. So we got the turn that we were anticipating. It was a little whippy, to say the least, last week until we got that breakdown, which turned out to be a failure. And we thought that that was likely to happen because the markets were down quite a bit from the August high. And continuation patterns after a move like that historically have a very high tendency to fail. So let's take a look at what happened. Today was a great day, and the broader markets moving up. It was what we call a gap and go. The gap up was relatively large. I think the gap was around a 1.5%, which historically is pretty big. Just typical day-to-day gaps that happen on a regular basis, about 0.5% for the broader markets. So 1.5% is pretty big, which makes it questionable whether it can actually go after the gap. But it did, and because we had our market internals really overcooked and supporting this reversal, that did support the potential for a gap and go. And things jiggled around a bit, and then they went. So let's take a look. So on the screen here, you can see a lot of ETFs, and these are the S&P ETFs as well as some ETFs from around the world, because we want to see, is the world participating and to what degree. Europe is pounded down pretty good. They were already down to the June, July lows. We can take a look at weeklies, but believe me, they were already down. You can see the United Kingdom over here in the upper right, France, they all had huge gaps and moved up to resistance, as well as Germany. And it's Europe, different ETFs here for Europe that can be traded. And then even Taiwan bounced up there. So unified move to the upside, and that's what you want to see as the markets make a turn. So we want to keep it in perspective. These are all downtrends. They're going to run into the wall at some point. I don't know whether that'll be tomorrow or whether they'll continue to go up until the end of the week. Looking at the S&Ps, this pivot high, PH pivot high, that denotes a bar with 3 lower highs to the left and right. So there was some resistance created there. So as it comes up into there, there's going to be a lot more sellers. And the faster it gets up there, the faster the sellers are going to show up, because patterns are pictures of what others think, institutions think. The faster profits come, the more inclined institutions and traders are going to be to take their money at an area of resistance, especially in a downtrend. From there, we'll just assess how far prices pull back, or do they go sideways, which would be bullish. Concept that we call absorbing supply, meaning sideways price action at resistance. So this certainly looks like it should be able to hit the 20 MA, that's the blue line, tomorrow, and actually theoretically should be able to get up above it, similar to what energy did here as crude oil began to stabilize, and that actually punched through the moving averages like they weren't there, the gap, and they went, or gap and go today. And obviously that is bullish, to be able to get through a resistance area almost like it didn't exist. Whereas, see other markets, financials just stopped right at the 20, materials got through the 20. So moving averages are subjective. We always look to the left to see if they're aligned with some support. Some are, some aren't. That's what makes them subjective. Ultimately, price is what we trade, not moving averages. So, materials, they're up at this resistance area here. And just draw it out there for you. Easy to see. And so consumer discretionary is underperforming. You can see they went up, they gapped up, they went down a little further. How do we determine relative weakness? Well, look at materials. That was going sideways. You can see financials were going sideways there. And I'm trying to get my little drawn thing out there. And you can see that consumer discretionary actually continued to go down. Part this is Staples. Tesla is a big part of this, and that was going down at the time. That showed relative weakness, and then it gapped up today. So this gapped up. So what we really would like to see is this begin to participate, because when we think about a bull market, you want to see consumer discretionary performing. In addition, you want to see technology performing. So technology here is underperforming materials and a lot of other things, financials, and we'd like to see that start moving higher. The closer prices can get to a pivot high, and here's your pivot high, right, and prices went down, the deeper they can retrace up to that begins to put the downtrend in question. You know, common sense. Everything we look at is common sense. You have a high, lower highs, lower lows, that's a downtrend. You get a deep retracement back up to the pivot high, you start to move into a sideways trend. If it can clear that pivot high, obviously it's a sideways trend. And then that leads to a bias that, buy the next pullback, the next potentially higher low or retest. If these stop, say these stop and turn tomorrow, they gap up and they turn tomorrow, that wouldn't be so bad, meaning shallow retracements and then pullbacks to the prior lows and then reversals. That's a good W type of a pattern. So something we'll be looking for. If it keeps going up, of course, that's a positive. The deeper it can get up into resistance, the better to break the back of the downtrend, but there's plenty of overhead resistance up above. Now, what we want to see with a move like this, part of the media is talking about, oh, it's the biggest up move, 2-day up move in whatever amount of time that they said. Okay, fine. Just because things went up, that doesn't always mean it's so bullish, meaning we want to see our internals giving some confirmation. So switching to this screen, and what you can see here, hold a second here. What we see here let me get this up. Jeez, this software. Hold on. Trying to figure this out. Drag to move. All right, there we go. All right, what we want to see, and I'm just going to move this out of the way. Here on the daily chart, you can see the, this was the day that we first got the turn that we were anticipating, and we got the accompanying market internals. So in one of my videos, I said, hey, this was great that the internals here, this AD line pegged over plus 1,000. And then we had that news that dropped it down. Now, we don't want to discount that because that's a positive. Now, of course, in downtrends, you get failures. And this initially failed. And you had this equally bearish move down. And then we had the turn. And now you've got this even higher AD line confirmation on the move up. And that's what you want to see moving up like that as prices are moving up. You want to see that confirmation. And during the trading day, you can see where this was up here, up above 2,000, and it stayed above 2,000 all day long. As you can see, that doesn't mean prices can't pull back. So you still need to be aware of trends and how things can turn and not be so enamored by the morning bullishness, because as a day trader, you can get pullbacks like this. But from my point of view, when I see prices, up above the moving averages like that, and the internals AD line is this positive, and I'm not looking to short this to take advantage of it. I'm looking for this to recover because everything is so positive. This is basically someone else's trade, not what I'm looking to do. So what, my 5-minute charts, I'm looking for the VIX to be pulling back during bullish periods, and this to be up high like that, going down while the markets are going up, and vice versa. So just give me intraday guides. And then the ticks, I want to see them staying primarily bullish throughout the day. Now, in the latter part of the day, you see this down here pegged down near minus 1,000. So when I see that, I'm saying, okay, this is where on a bullish day, it should turn and flip back up again. And of course, it did. Now, there was some intraday or end of day little trades there, pullback scenarios, but markets didn't get that far. Again, there was a pretty decent gap up and it was extended. there in the morning. And if you did well here, it's all well and good. You don't even care to participate in any of this. So our SPX credit spreads, 100% today. That did well. Remember, first thing in the morning, we were looking for this to go up before doing the call side. I said we want it to be above 3,800. Never got above 3,800. And I said at the open, there was a put spread down at 36.40, which I said was a no-brainer. Our other internals here, this is great. You want to see this coming up. And an update tomorrow, maybe this gets to plus 200. That would be exactly what we want to see. It stopped right. You can see on the hourly chart here, stopped right where that pivot high was. That's why I say just look to the left. That's all you need to do is look to the left. You don't need to draw trend lines, fib lines, Gann lines, or anything like that. It's right on the chart for you to see. You don't need to see anything or use anything proprietary to know where the sellers are. It's right there on the chart for you to see. The reaction to it is what you want to take note of and see, does it pull back? Does it go sideways? Sometimes prices get up to resistance like here. It took out the high and it collapsed again. No, one day is different from another day. That's just the way trading is. Now, as we go into the end of the week, what we're going to want to keep an eye on is this weekly chart and see where this bar closes. The more it closes near the highs, maybe gets a little higher, the big range bar, that's going to be that bullish confirmation. It doesn't mean prices won't pull back, and they could pull back deeply, but that's part of a bottoming process. So we'll assess that and see how it all shapes up. We'll be online tomorrow at 9 o'clock on the different sites, updating what's happening pre-market, our open trades, our bias for the day, SPX credit spreads, and we'll see how things go. If you have any questions, email myself. Oh, by the way, tomorrow is Master Trader Live. Go to the site. It'll be a great event. They always are. And under education, scroll down to the bottom and you can register for tomorrow and even the next week. The free events for Master Trader Live. You can watch them online or join us in our chat room. And of course, we'll be taking questions regardless of where you are. So join us, get the education, look to profit from the markets, but get the education, know what you're doing, always money management, and we'll talk tomorrow.